And I know times like this you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is today is Sunday, the 11th of February 2024. I'll be doing the weekly market review, starting with the DXY. Here we have the weekly chart. As you can see, price has swept the buy side liquidity as I've mentioned earlier last week. Price walked the buy side liquidity and walked inside this fair value gap. Now, if price wants to continue running up higher, I'm monitoring the consequence of this premium wick. If we see any resistance towards it on the daily time frame, this will be telling me that we're likely to start trading lower to this sell side liquidity and this sell side liquidity. Otherwise, if we trade on the daily time frame above the consequence of that premium wick and treat it as support, that will also tell me that we're likely going to be trading up higher, and we'll be seeing this as a market maker buy model, where this is origin consolidation, the sell side of the curve and the buy side of the curve, attacking these relative equal highs. So going to the daily time frame, you can see we swept the buy side liquidity here, and we work inside it. So I'm looking at the consequence of that premium wick. You can go to your charts and you can measure the consequence of that premium wick and monitor the trading at the daily time frame to see how we're trading on the daily time frame. If we see price trades above it and close above it and start treating it as support, this will likely tell us that we're likely to reach to this buy side liquidity relative equal highs. Otherwise, we'll be trading lower towards that low. Now, if you measure from this high to this low, we're pretty much at equilibrium. So we still need more information, more intel from price in order to execute on what we're seeing in the charts. So that's going to be pretty much it for DXY. Going to ES, here I'm viewing the weekly time frame chart. As you can see, we have swept the buy side liquidity right there. We've swept the all-time high, as you can see. So the all-time high has been swept. Now we don't try to look for lower prices immediately because we're in a buy program, as you can see, since November last year, and until now we're in a buy program. Every trade lower was just a retracement to a PD array that was accumulating and engineering liquidity, building interest in shorts, and for smart money to buy those shorts and offset them at the buy side liquidity. So as you can see, the buy program has been set. Now we don't try to pick the top for the buy program. We continue looking for high prices until price proven otherwise with sell side delivery. Until that happens, we're still looking for higher prices. So whenever price forms a high, we attack it next week. So going to the daily time frame, and by the way, there's like a small fair value gap between this candle's high and this candle's low. It's not fully filled. There's about 3 to 4 handles gap between this candle's high and this candle's low. And by the way, this is the weekly time frame chart. Going to the daily time frame, you can see we have daily fair value gap right there. Price can retrace and walk inside of it, then run up higher for this buy side liquidity that has been formed. So trading at the all-time highs is a new discovery, as I've mentioned earlier. It's not something that I've been mentored or been taught how to treat it. So it's just as a new discovery for me as it's like for you. So we'll continue looking for higher prices until we break this low. If we break this low, I'll start looking for lower prices, attacking these relative equal lows and these lows. Otherwise, this retracement here will be a retracement to the propulsion block here. This is a bullish order block. This is a bullish propulsion block, and this is a fair value gap. So price would retrace to the fair value gap and the bullish propulsion block and then run up higher towards this buy side liquidity. That's what I'm expecting from price regarding ES. Going to NQ, as I've mentioned earlier last week and the week before, we don't try to pick the top. Now, 2 weeks ago when we attacked the all-time high, some people would have looked at that as Now we're done with buy program, and I'm gonna start selling. Next week, sure, we sold, but we just sold to the constant requirement of that fair value gap between this candle's high and this candle's low, and then from there we rallied up higher. So people would think that why would it rally up higher, and we've already finished the objectives right there, the buy side liquidity objectives. Now that doesn't matter because we're in a buy program. Even if the objectives are met, we still stick to our buy program. We don't try to switch immediately after attacking the objectives. Going to the daily time frame, you can see there is no fair value gap here, but you can see on the daily time frame there is a small fair value gap between this candle's high and this candle's low. It's just as like ES, but ES is a bigger gap because it was trying to attack it was in a hurry to attack the buy side liquidity right there. So this is the low that I'm calling for NQ. If price breaks below this low, then we're likely to see lower prices attacking these lows, this low, and perhaps these fair value gaps right there. So that's gonna be pretty much it for NQ. I'm still looking for high prices until we break this low, and I can change my bias to bearish. Going to Dow Jones, also known as the YM, also known as the Dow Jones. Here I'm viewing the continuous construct and I'm viewing the weekly time frame chart. You can see that now regarding Dow, it's a bit tricky. Why? Because we have an immediate rebalance and we have swept the buy side liquidity. Now, if we see an immediate rebalance, I would like not to see price attacks the buy side liquidity, but in this case, we've seen the immediate rebalance and the buy side liquidity being hit. Now, this would be characteristic for a consolidation. So I'll be expecting some kind of consolidation. If you go to the lower time frame, daily time frame, you can see that pretty much we formed the three drives pattern right there, and there's pretty much nothing inefficient. There's a small fair value gap and it has been filled here. So now I think from there we're just gonna be attacking this low, fill this fair value gap, and we might just consolidate between this low and this high. So being some kind of consolidation, because as you can see here on the weekly time frame, immediate rebalance right there, and the buy side liquidity has been hit. So there's nothing pretty much in this area in terms of liquidity resting. There's no any liquidity resting. Objectives have been met, the all-time high has been met, and there's nothing inefficient. Everything is efficient here, and the buy side liquidity here has been hit. So I would be expecting price to consolidate between this low and this high. As you can see here, between this low and this high, there's this low and this fair value gap. So price can trade down lower towards this fair value gap and engineer some liquidity in the marketplace. And after it trades low below this low and fill this fair value gap fully and trades to the bullish breaker, it can then trade up higher to attack the buy side liquidity again. But right now, there's nothing to be attacked. We have already swept the buy side liquidity right there. So there's no liquidity, absolutely no liquidity resting above there. So that's gonna be pretty much it for Dow. Going to Euro USD. As you can see, this last week we've traded lower, took out the low, and traded to the monthly fair value gap. You can see the reaction from the monthly fair value gap. We also traded with bullish order block. You can see the reaction once we traded to the monthly fair value gap. We immediately seen strong reaction from the monthly fair value gap away from it. So this is to show you that this might not be present on the weekly time frame chart. Like this fair value gap on the weekly time frame chart, it's not present. But on the monthly time frame chart, I already showed that in the last week review. It is right there. And you can see how price traded to the high of the monthly fair value gap and just traded away. Now, people who are just viewing the daily time frame chart, even the daily time frame chart, may be ambiguous about it. They don't know why did price react from that level. But we already know, and I have already plotted this monthly fair value gap rectangle weeks ahead. And it's already there in my videos, in my reviews. You can check them out. In the last week review, I've also showed, I believe, the monthly chart, either in the last week review or the one before. But I showed the monthly fair value gap and I showed it from the monthly time frame chart. So you can go, you're more than welcome to check it out. We took out the low, traded the monthly fair value gap, and we've seen some reaction from there, and we reacted. Now we formed a fair value gap. As you can see, we're trading the fair value gap. Also, you can see the reaction from the refined bullish order block one more time here. So we've seen the reaction here, and we've seen the reaction one more time right there. So now price can actually, as I've mentioned on DXY, we're pretty much at equilibrium between at this stealing range from this low to this high. And price can just turn up really up higher to this buy side liquidity, or it can just trade lower to that sell side liquidity. So I'm not holding any bias. It's indecisive for me. I'm not trying to hold any straight narrative or bias for Forex and DXY. I'm more interested in indices at the moment, looking for high prices, sticking to the buy program. Although we may enter a consolidation period right now in the indices, but that's a better market that I will be trading. Now, honestly, the last few weeks, look at the trading days here. I mean, sure you can scalp, but look at this. Is this a favorable condition for you to trade or environment to trade? I don't think so. So that's gonna be pretty much it for you. Going to pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. You can see that on pound USD price didn't take out this low, but on euro USD price took the low. So that can be an SMT where euro USD is showing weakness, whereas pound USD is showing strength by refusing to take out this low. Now, if that's true, I wanna look at the consequence of the discount wick, and I wanna see some support at that level on the daily time frame chart. Otherwise, if we trade below it and close below it and treat it as resistance, that would be telling me that we're likely to see lower prices attacking these lows. At least these theoretical lows and this fair value gap between this candle's high and this candle's low. And later, if we close below it, we'll be trading towards these lows. Going to the daily time frame, you can see there's a potential of forming a bullish breaker here and a bullish mitigation block here. So between this low and this low, price can form this as a bullish mitigation block, and between this low and this low, there's a potential of forming this right there as a bullish breaker. If we see the reaction on the daily time frame, the consequence of that discount wick, as you can see here on Thursday, there was some reaction of the consequence. So if we continuously see some support at that level, we can potentially see the formation of the bullish breaker here and the bullish mitigation block here. So there are like two BD arrays in one area. This is going to be influential to send price higher towards the buy side liquidity right there. So that's going to be pretty much it for this weekly review. I hope you found this one insightful. Also, one more thing, there's going to be CPI on Tuesday, the 13th of February 2024. I'm going to be live streaming that approximately 8:15 a.m. New York time. You can join the live stream and benefit from the studies and gems that I'm going to be sharing there. So until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.